Hello traders, I'm back with one more very interesting video. So looking at this slide, it says price has to kiss the 200 moving average, okay, the exponential moving average. Looking at this thing, we can just anticipate something big on the cards as per the data. So alright guys, this video is just for the learning purpose guys. I'm not giving you any tips, any sort of recommendation or any sort of prediction. This is for pure learning. Believe me, you will enjoy this video. I mean, you have to trade with the data. You have to what do we say, right? You should always have the data with you so that it backs up your trades, so that it complements your trade. Okay, let me right away take you to where is that, let me take you to my this thing. So guys, you know, right, this is the chart ink, okay, one of the screener. So basically what I'm trying to do here is, see, if at all if you look at this thing, so I wanted to just know all the stocks irrespective of nifty 50 mid stocks and anything. I want to know any stock whose price is less than or equal to 200 exponential moving average. See, this is EMA. Okay, simple, only two conditions guys. I want to see the instruments or the stocks or the underlying stocks whose price is, basically this price is less than or equal to 200 moving average, and there is one more condition, that should be greater than, the price should be greater than the close of 400 moving average. You'll get to know, don't get confused, you'll get to know. So what am I trying to do is, like, so these are all the different segments. So I'm just trying to check with nifty 50. That's it guys. Okay, just show me the stocks whose price is less than, guys, less than or equal to 200 moving average and greater than 400 moving average. The moment I click on the run scan, it shows only two stocks. That's it. Out of nifty 50 stocks, it shows only two stocks. This clearly says that the remaining 48 stocks are above 200 moving average. Guys, there is a point to catch, meaning, see, what is 200 moving average guys? Let me show you one more thing, right? See, uh, you know, right, the price moves like this, right? It goes up, it goes down, it goes right, and there is something called, there is a 200 moving average, right? This will go like this, right, always this will go. So let's say the price, when the price stands here, right, it might took the support of the two, this is 200 moving average, this line, this curve line. So anytime when the price goes up, it can be 1 month, it can be 2 months, it can be 1 year. So at one time it has to come and kiss the 200 moving average. That's it. See, price cannot go straight upside, right, or price cannot go straight upside like this, right? I mean, there is a sort of correction, right? There should be a consolidation. So whenever it took support here, it went up, and then again it has to come and kiss the 200 moving average. This is how the market has been designed. That's it guys. Now again it went up, it came down, it did not took the support, again it went up. This might be like 1 month, 2 months, 3 months, 4 months, 5 months, then again it will come, it will take the support of the 200 moving average, and then it will go up. So maybe again it will go up, in line to that 200 moving average will also go up, and then it will go up, and then it might touch the 200 moving average. So this is making higher highs and higher lows guys. I'm not talking anything about basics, I'm just giving you one simple example. I'll show you all the practical chart. Okay, so now there is a catch guys, don't ignore this video. You are going to learn something very, I mean, you can just sense something big on the card. Okay, simple. What I've done, right, I'm just trying. So there are only two stocks, so let me show you the Cipla. Okay, then you will get to know guys. Okay, right, let me show you Cipla. Okay, see, what did I say? Price. Okay, let me plot the 400 moving average also. This yellow color line is 400 moving average guys, this green color is 200 moving average. That's it. I want all the stocks which are between this 200 moving average and 400 moving average, because these are the stocks which can either give a big momentum, because any stock below 200 moving average, any price which is below 200 moving average is considered to be a what? to be a downtrend stock, and anything which is below 400 is super downtrend stock. Simple, guys. See, what did I say? It took the support of the 200 moving average, it went up, it went up, it went up, and finally it has kissed the 200 moving average. I mean, I can show you hundreds of example. It took the support of the 200 moving average, it went up, it went up, it went up again. It took the support of the 200 moving average. That's it, right? Right? Every price, guys, every price. I mean, you take world's best to best stocks. Even let me show you Amazon, if I can get right. Amazon stock. Okay, let me close this 400 moving average. See, 200 moving average, it went one sided, went up, went up, went up. Finally it has touched the 200 moving average. Again it went up, it touched the 200 moving average. So maybe what I meant to say is like, see, now this has broken the 200 moving average. So what did I say? The moment it broke, it is below the 200 moving average, this is considered to be a downtrend stock unless and until this is trading above the 200 moving average. So what is 200 moving average? Don't go into technical. Simple, the last 200, the price of last 200, what do we say, 200 days. That's it. Now this has finally breached the 200 moving average. So what I can sense is like, either maybe it will go up, who knows, right? It can go up, right? It can go up, or else it will retest. By the time the 200 moving average will come here, so then it will intersect, and then it will start its upper side journey. Okay, as and when it goes, the 200 moving average will also go in align to that, and then it will retrace. That's it, right? I mean, in normal technical jargon, right, we treat it as retracement, or we say the correction, or the, what do we say, even it could be reversal. The reversal would be the moment the price stands here, if this breaks the 200 moving average, and if it comes down, so then that is the reversal. But otherwise this is making higher highs and higher lows. It went up, it might take the 200 moving average, so this high, this low is greater than this low. Again it might go out, up, right? Again this might come out, so this low is less than this low, so this is making a sort of higher lows and higher highs. Got it? So now let me take you, what is that we are discussing about in this video. So now let me take you back to this thing. So what does this indicate, guys? So meaning all the 48 stocks are above the 200 moving average. Let me all the stocks are above the 200 moving average. And what did I say? I said any stock price has to come and kiss or touch the 200 moving average. Point number one. Okay, let me show you, let me show you. I'll just remove this. I'll just unhide, I'll just disable this thing. So I'm just checking any stock which is in between, I mean less than or equal to 200 moving average. Let me click on the run. So now check this, guys. So the remaining stocks are, right, see, okay, let me show you, right, Infosys. Let me show you, guys. This is, don't get bored, you are learning something very critical. Okay, Infosys. Okay, check this. Now this is the Infosys, guys. All right, so 200 moving average, price is below the 200 moving average. And what is the condition? If I plot the 400, so even this is below the 400 moving average. So technically this is a downtrend stock. So maybe just in case, right, if the market keeps going up, so this might have the potential to go up. But if Nifty crash, this will crash like anything. That's what you are going to learn. So now let me take you back to, so now what I'll do, guys, I'll just enable this one. All right, so now slowly I'll show you. Okay, so in Nifty 50 there are only 2 stocks, or ideally we can say like 3 to 4 stocks, which are below 200 moving average. But let me just change this. Let me just change this to greater than. Okay, greater than 200 moving average. If I click on the run scan, right, these are all the, let me take you to the second page. So almost like 43 stocks are above the 200 moving average, which might, guys, again let me reiterate, which might need to kiss the 200 moving average. Got it? Right, because I'll show you many examples now. So maybe this stock is way above the 200 moving average. Maybe the 200 moving average is going like this, but the price is here. The price is stands here. Okay, you got it? So now there is a, what do we say? One second, guys, let me take the blank. So there is a chance that this has to retrace. you call it retrace, you call it correction, you call it any other thing. So that has to touch the 200 moving average. I can show you hundreds of stock. So just imagine all the 43 stocks, guys. 43 stocks are way above the 200 moving average. So there is a correction required. And let me show you one more thing. Okay, let me show you one more thing. Where is Nifty, guys? Where is Nifty? Okay, let me show you one more thing. I'll delete all these things. See, Nifty has given a one-sided movement of how much? One-sided movement of almost 12% move. So don't you think there is a correction required? You are you getting what I meant to say, right? This is called the data. This is just for learning, guys. I'm not giving you any sort of prediction, but this is how I evaluate. I do the data with the data driven. So what I meant to say is this has given a one-sided momentum. So guys, there requires check the 200 moving average. Last time when it took this support, Nifty, when it took this support of 200 moving average, right, it almost, let me show you, right, it almost gave a momentum of 7%. So don't you think, even check the shape of the 200 moving average, right? Maybe this will go up like this. One second, right? Maybe this will go up and then the price will come down, right? Slowly retracement, and this will change the shape, and then this might take the support, and it can go up or it can breach and it can go down also. I'm just giving again, guys, this is just for the learning. So whenever, let me show you, right, it took the support here, 200 moving average, green line, it went up and then it took this support, it kissed the 200 moving average. All right, so I can show you plenty of many examples, right? See here, right, it took the support of the 200 moving average, it went up, it went up, it went up, it went up, and then again it kissed the 200 moving average. Second time it kissed the 200 moving average. I can say this, it took the support of the 200 moving average, it went up, again it came down, like literally it took this support, it has literally kissed the 200 moving average, it went down again, it took the support, it went up, it kissed the 200 moving average. I can show you hundreds and thousands of examples. Okay, let me show you one of your favorite, this thing, right, SDFC Bank, right, everyone's favorite stock would be SDFC. Let me delete all these things, right? Let me close this 400 moving average. That's it, guys. This is pure 200 moving average. And what better example you need? Took the support of the 200 moving average, went up, finally consolidation, again retracement, it took the support of the 200 moving average, again it went up, there is a resistance, right, again, I mean, forget about this resistance, again even this is one of the data, again it came down, it took the support of 200 moving average. But now my expectation is it might bounce back, but if market comes down, if bank nifty comes down, then do you think this will go up? Potentially this will also break down the 200 moving average, and then this will start going down, and the 200 moving average will be going like this. Again it will come, it will take this up, it will take the resistance, the 200 moving average, again this will come down, again the 200 moving average, it will take this support, it will kiss. See, it is not only on the upper side market, even on the downside market also. See, check here, it broke the 200 moving average, came down, again it went up, it kissed, again it came down, again it has kissed the 200 moving average. So both from for the upside and for the downside it has to kiss, right? I mean, guys, you are learning something. This is not lesser than a paid content. If you have these data points with you, you can do wonders. So technically, okay, let me again take you back to this eye chart link, right? So now 43 stocks are above the 200 moving average. Let me show you one more thing, right? Let me show you, let's take an example of SDFC Bank only, right? Check, right? Maybe one second, why SDFC Bank is showing, yeah, because we said above 200 moving average, right? Let me show you the SDFC Bank, right? We said above 200 moving average, so technically this is above 200 moving average only. That's the reason your SDFC. But let me show you something called, let me show you anything, right? Let's take ICICI Bank. Let's see. Okay, let's see ICICI Bank. Okay, see, this is way above the 200 moving average. So technically what I feel is like this needs a correction. Might be, sorry, not this need, this might need a correction wherein it has to kiss the 200 moving average. Let me closely show you few more stocks. Okay, anything, right? SBI, or else Titan. Let's go for Titan. See, this is the way, guys, you have to do the analysis. I mean, if you are doing the same old fashioned, right? See, Titan, it's way above the 200 moving average. Okay, so maybe I'm expecting, maybe it might, like, it can go up also, who knows, guys. But this has given a one-sided movement, guys. This has given a one-sided movement of almost like 24%, right? Last time when it took the support of the 200 moving average, it almost made like 18%. So don't you think this needs a correction? This cannot go straight up, right? See, it took the support of 200 moving average here, went up. How many days it was? Let me show you even that thing, right? Right, it took the support, and then the moment it took the support, right, this was almost like 164 days, guys. Meaning, right, when it took the 200 moving average support, it went up almost for 164 days consolidation, then slowly it came down, so finally it took the support of the 200 moving average. So 164 days, it can be 164 days, it can be 10 days, it can be 20 days, it can be 1 year, but technically, so don't enter into any stock which is far away from your 200 moving average, because the tendency to kiss the 200 moving average is more. Check it here one time, second time, again it went up. Who knows, it will take the retracement, but I might be wrong. It can go up also, and then it might take the retracement of the 200 moving average. I'm not giving you any sort of prediction tricks, but I'm just giving you a content wherein you can just go by the data. So now the actual video starts, guys. Okay, now let me show you, okay. So forget about Nifty 50. What I'll do, I'll just go for the Nifty 100. Okay, the second. So there are only, okay, so 1 second, guys. What did I do? Okay, this is less than or equal to. Now check the magic, guys. So in Nifty 100 there are only 4 stocks which are less than 200 moving average. That clearly signifies the remaining 96 stocks or 94 stocks are above 200 moving average. So that clearly gives an indication that 200, the price has to kiss the 200 moving average. So smart traders have got what I meant to say. 200. Let me go for Nifty 200. That's it. These 6 stocks, others, all the 196 stocks are above the 200 moving average. So now you have to filter it out. Right? This could be a classic example. HDFC. HDFC Bank. Okay, this could be a classic example. Though this is above the 200 moving average, but just in case if the bank nifty goes up, this will have the potential to go up, because this is at my white color trend line. It is taking the support of 200 moving average, right? So this can be a good potential stock. But again, guys, I'm not giving you any. This is only for the learning purpose, but now don't enter into the stock. I mean, you got it right. So try to filter out the stocks which are matching or which are at the 200 moving average, and then if your price action says this has the potential, then you can capture. But let's say, let's take an example of other stocks, right? So Cipla or something, right? Let me show you IRTC also. Okay, let me show you IRTC. Okay, check this, guys, check this is below 200 moving average, but this is standing somewhere here. So now it's up to you. So whenever it took the 200 moving average, it went up. What did I say? Maybe ideally they should have went up, but or not all stocks will go up, right? So maybe the company performed bad, or there should be maybe at this point Nifty was going down, it went down. So now this stock is standing here. So you think, right, even if it comes up, right, so this will act as a strong resistance. Only when this 200 moving average is broken, so then again it can make all-time highs. I mean, what I meant to say is higher highs and higher lows. So what did you get to know? Okay, let me again take you to Nifty 300 or 500 also. Let's see like how many stocks are. That's it, guys. Out of 500, these are the only stocks. Now do you think these are all the potential stocks which can go up? Technically, yes. But even if Nifty falls, this stocks has two-way basically. Yes, even if the Nifty falls, this stocks might go up. Might I said, because already these are downtrend stocks, right? If these are like fundamentally strong companies, right? Even though the Nifty is going down, see, when Nifty was going up, the stocks were going down, right? Now when Nifty is going down, maybe these stocks might have already seen the maximum limit. I'm just telling guys, maybe out of this 11, maybe 7 to 8 stocks can go up also. Who knows? SRF, one of my favorite stock. Let's see what SRF has, right? This is how you have to do the what do we say, see, this is a golden upper, see SRF, right? This is my pattern taking the support of this white color trend line, and above I have the 200 moving average. It took this up, see, it took the support of the 200 moving average, it went up, again it kissed the 200 moving average, but this time it came down. It took the support of the 200 moving average, it went up, retracement, again went up, retracement, finally this kissed the 200 moving average, it came down. But now there is no guarantee that this will break down, right? Chances are that it might come up, it might break the 200 moving average, it might kiss, and then it might start making the higher highs, higher lows. This can break the resistance also, and then it will go up. By that time your 200 moving average will also go in line to your price, and then there might be a rejection, there might be a correction, right? So this will touch the 200 moving average. So when it's touching the 200 moving average, guys, you took the stock here, so technically the stock is going up, right? Though this is just the correction part, guys, this is just the correction part. Now again it might make a bigger side move, right? Again it will make higher highs, and then this 200 moving average will also go, and then again it might touch. So this is the cycle it follows. So finally guys, I want to conclude saying that any price above 200 moving average is considered to be uptrend stock. Any price below 200 moving is considered to be downtrend stock, and any stock which is below the 400 moving average, let me plot the 400 moving average. Okay, let me delete all these lines. Any stock below 400 moving is super bearish, but this is called the trap. This is called the trap, guys, right? It went like 400 moving average, this is trap. How the data players will play, again then boom, it came up. That's it. It took again the support, see, it breached the 400, it went up, again it took the support, it kissed the 400 moving average, and then boom, it came up. That's it. Any moving average, be it your 200, 10, 15, 5, but I usually use the 200 moving average. But this is way, because I'm a swing trader, because I'm not a swing trader, basically I do the options also. What I meant to say is, like, if I'm doing the swing trading, I have to do the analysis on the 1 day time frame, not on 1 hour. Alright guys, so now what I meant to say is, okay, let me show you the mid caps also, right? We have seen all the Nifty, let me show you the mid cap 50. That's it, right? You see only these two stocks, Federal Bank and Indian Railway. In the mid 50 stocks, these two stocks are below, less than 200 moving average, above 400 moving average. That's it. So what does this signifies? So now the corrections are required. I would say 95% of these stocks of all the segments are above 200 moving average. So maybe what I'm expecting is, right, there is a correction required. And also the Nifty has given a one-sided movement of 12% upside movement, so there is a correction required. So when there is a correction required, this will happen. Okay, what do we say? The stock went up, let's say your 200 moving average stands here, so this is required for majority of the stocks, the corrections. All right, so now any stock which is far away from the 200 moving average, try not to enter into those stocks, because the correction is required. Got it guys? So now let me show you that's what, right? We have seen the Nifty also. Let me again show you one more time the Nifty, right? Let me show you one more time the Nifty, so that you will get to know this. I mean, if at all you like the video guys, this is how, see, one-sided movement of 12%, even it took the support of the 200 movements 10%. So what I'm expecting is, before I conclude the video, sort of correction, right? A sort of correction is required. If this keeps coming down, maybe this will go up, and then there is a overlap required, intersection required, so it can go up or it can come down. All right, it might, sorry to use that word, it might come down. This is the way you have to do the analysis. All right, so this will help you guys, this will help you in terms of screening the stocks. This is how I do the screening of all the stocks. I show very much, I am very much particular about these stocks which are taking the support of 200 moving average, and they are above 400 moving average. I do the price action, and just in case if they see, a little best example is SDFC Bank. right? This is how I do the price action. This is typical falling into my radar. Got it? One second, let me show you. This is, see, this when it took the support, it went up, took the support, check the intersection, my white color trend line and the 200 moving average intersection. My white color trend line and the 200 moving average center. My white color trend line and the 200 moving average, right? So my expectation is like this is meeting my criteria, and maybe I'll not mind going long here by taking the stop loss of the previous low. That's it. This is my stop loss, and I will write this in case if this keeps going up. If this keeps going up, I'll just shift my stop loss again to cost, and then I'll keep trailing my stop loss. But this is the one of the exception, guys. So you have to combine the price action with data. I mean, data, I use the concept tool. So go to my playlist and watch the playlist on the name of concept. You will be surprised to see how magically the data driven price action will help you. Alright guys, so just in case if you like this video, guys, give it a like, right? Just share with your friends in case if you feel this makes worth. And also if at all you want to join me as one of my paid mentorship program, right? You will be having the link in the below description in the same video. Go and check the entire video. I've given you sample videos, I've given you some dummy, not dummy, so some demo videos. If you feel this makes sense, please join my paid mentorship program, wherein you will be able to learn, explore many new unique things. All right, thank you.